And we're back. We got another one. But before we get going, let's take care of some housekeeping notes. This episode today is sponsored by Epic Mortgage. Whether you're buying, refinancing, or investing, call Epic today. That's 708-905-5300. That's 708-905-5300. It's your dreams, your goals. Let's plan together. Now, if you are trying to plan and you're trying to get that blueprint, don't forget the book is out. It's the Ultimate Mortgage Guide. It's available on Amazon. My buddy Vince, he normally always tells me, put the book up there so they can see, so everyone can see. Really, obviously I've been in the business for over 23 years, put a lot of time and effort. And what I noticed was, some of the questions that I get from 2002, I still get in 2025. So I thought maybe putting a book together would be, a little help to the audience. So if you need a blueprint, if you need to figure out, no matter where you live, if you live in Kansas, if you live in Nebraska, it's still pertinent information that can help you close on your deal and hopefully quicker. So go to Amazon.com for the Ultimate Mortgage Guide. Today is Thursday, so for people that know, we have a new Epic Spotlight podcast interview. We did it with Kent Nichols. Kent Nichols is involved with a church locally in Indiana. And so it was an interesting conversation with him, just learning some of the backdrop and just how business works and flows through an actual church. And today we have Miss Laura Prey. Good morning.
Good morning.
Afternoon, I should say.
Oh, yeah, barely afternoon.
Yes. So we're both on Central Time. So this, like I said, streams on Facebook, LinkedIn, and YouTube. So we do have some Californians that watch us. So, it's brunch time for them, but, lunch here in the Midwest.
Right.
How's that weather down there?
Our weather has been great for about, a week? I was just thinking about it when I got in the car today. I said, how long has it been good? How long has my air conditioner not had to run and save me some money? That's what I was trying to think about.
There you go. There you go. Yeah, it's been weird here. I mean, obviously, I'm like, it's still August, but it feels like end of September,
Correct.
Kind of got that chill.
Yeah. So, well, I don't know what it's like in Indiana, but we have, all the seasons in one day. It's not uncommon for there to be a lot of snow and you're wearing a coat all the way up to a tank top by the end of the day.
Sure.
So it's not surprising, but I'm sure next week will be a bajillion degrees again.
There you go. There you go. Today I figured it would be a great time to talk about some insurance. It's obviously, coexist with, obviously obtaining a home mortgage.
Right.
There's a lot of, just things that I thought the audience may want to hear, know, and obviously get your perspective. And so we're going to spend the time just talking about insurance and maybe educating us on just what is going on, why are premiums. I did take some notes. I'm in Brookfield, Illinois, so I'm 20 minutes outside of downtown Chicago.
Okay.
We're licensed in multiple states. We're licensed in 9 states. So around your neck of the woods, I'm in Georgia, I'm in Texas, I'm in Florida. And then I do have family in Nebraska, ironically, right around the Omaha area. So yeah. I attended the Luminary Museum, brand new. I think it's at least a couple years new, but it was really new, like a children's museum. So it was really kind of fun to bring the fam. Yeah. But obviously in the Chicagoland area. But I noticed and I'm curious on this for you, when I was looking at averages of insurance premiums, roughly we're right around about $1,800 a year for insurance, for homeowners insurance in, Cook County, which is the second largest county in the nation. I looked at Palm Beach, Florida, for example. That's like $3,000. Gwinnett is $2,000. Indiana, Lake County is $1,500. So, I mean, it's hovering around, I would say, if I had a ballpark, anywhere from $1,800 to $2,200 is seems to be the premium. Obviously that has adjusted and changed over time. And I just wanted to see if you had some insight on why.
So to give you insight about even more in the middle of the country, Midwest, us in Tornado Alley, something that I know that you guys get weather. Most of, the Midwest gets weather related incidences, but in the Midwest insurance, when I say that if there is on a 4-digit premium, if the first number is a 1, I'm like, we are going to get this, because on average in Kansas, Missouri, Nebraska, you're looking at rates between $2,000 to $5,000, which, if it used to be when I first got into it, and you seem like you're maybe in the same age range as me. So we've been doing this for, just a year or two, right? But, I could write an $800 house. Exactly. I could write, and then it was like a $1,200 house. And in the last couple of years, you're talking that, today I've looked at 2 different home quotes so far this morning, and one was 4,100 and one was, right around 2,100. That's a pretty big gap, and it used to not be like that. Sure. So what's driving it? Natural disasters or catastrophes. So anything that gets rated over, like after a certain amount of people are affected by a storm, hailstorm, tornado, whatever type of thing is, you're not allowed to charge for those claims because they're catastrophes, because so many people are affected. And so because of that, insurance companies, part of your premium goes into the bucket for claims, right? Right. And that claims bucket, it pays out as things get paid out. Well, if you have 30 catastrophes, basically by the middle of the year, then they're paying out a lot and they're not recouping a lot, if that makes sense. It does. And so because of them not being able to recoup, then they say, well, how do we end up still, because let's be honest, isn't all major companies a for-profit business, right? And so sure, they have to make all the margins work. And so that's where you see the rates change. If you want me to get super nerdy, but important to the conversation is that really it is what's driving everything is that the companies have done a little bit of roller coaster of trying to make a decision on, do we take a rate increase, which isn't good because then people will shop? Do we raise people's deductibles? Because if we raise their deductibles, then basically we'll pay out less money, right? And so that can kind of be like a fake rate increase, right? They can basically get away with not taking a rate increase because they make people pay a higher deductible. And then the really big factor is that, the price of roofs has doubled basically, I can't say that exactly, but because in every area it's going to be a little bit different, but I would say that that's not a crazy thought. And since the most likely thing to happen is wind or hail, right? The chances of your house burning down compared to the chances of you having a hailstorm? Clearly the hailstorm could happen at any time, right? And so now the way they're covering roofs is, it's your biggest thing that's probably going to have to be replaced, that's a high-end item and the most likely thing to happen. And so they have just changed the way that they protect roofs as well. So you've kind of got a repeat here of all different ways of how they're trying to keep rates without having to raise it. And guess what? It did not pan out well. And so then they raised people's deductibles, lowered the roof coverage, and raised rates. They still ended up doing all of it, even though they were trying to protect it a little bit.
Yeah, we seen in the news, obviously, with like State Farm, right, doing a major spike increase. And that might be great for you, right? Customers might be coming over to you.
Yeah, I am always, anytime. Well, one, I maintain really good relationships with all different agents of different, all the different companies. One, because I want to know what's coming, but 2, because it's just good to kind of, you start getting calls from one company in particular, you'll start getting a bunch of calls from those customers and you're like, what is going on? And so it's nice to be able to have somebody to reach out to and go, can you tell me what's going on here? I feel like I'm missing something. And yeah, State Farm, for example, they are notorious for being able to do things that the rest of they're number one for a reason, right? Right. And they are notorious for being able to hold out as long as possible. But then when they finally have to pull the trigger, it can be a big kick in the teeth. And sometimes, like, for example, in California, they just pulled out altogether. They just said, we're not going to write any homes anymore at all. And that happens. Different companies will basically say, we're not going to write any business anymore in this state until our profitability comes up, basically.
Yeah, I think it was Country Financial pulled out of Florida. It's like, hey,
Mhm.
we're not even going to do business down there.
Yeah.
Um, and I kind of feel like the fractionality, if that's a word, but we're gonna say it will be like that, right? That
Mhm.
insurance companies will start saying, hey, we're only going to do business in these states which are less likely to have natural disaster.
Yeah. Well, I mean, it doesn't feel like, I mean, just think about it. If you're thinking about all the different natural disasters that have happened this year, I mean, it feels like all areas are getting hit with something. You got fires in Colorado, and you've got, flooding in multiple places, for sure
Sure.
Texas this year, and you've got hurricanes coming over here, and then you've got a ton of different wind and hail and all that sweeping the Midwest. Um, yeah, nobody is unaffected by a natural disaster. It feels like it
Yeah.
just depends on which one is the lucky one you get.
Yeah, I mean, in Illinois, we're still in the tornado lane, so we get, it can get real dark and super windy, and
Hmm.
trees are uprooted, and you're like, oh my gosh, you hear the damage and stuff. I was trying to think what state has less likely. I felt like Michigan maybe. I mean, it can get super cold, but I feel
Hmm.
like they don't get tornadoes,
Yeah.
and they're probably Michigan might be the best state of all
Yeah.
states included. But it's interesting. Why don't we take this time right now, Laura? Why don't you just introduce yourself to the Epic community?
Sure. So I am Laura Prey, and I own Prey Family Agency in lovely Manhattan, Kansas, not Manhattan, New York, Manhattan, Kansas, which we are called the Little Apple. So that's our, I can't say claim to fame, but that's what they like to call it. Um, so I'm located downtown. It is the home of Kansas State University. Go Wildcats. First football game is this weekend. I'm super pumped.
Whoa.
Um, I am a exclusive Allstate agent. So Allstate is my big company, and that's the main. I'm an exclusive agent, so I'm not like an independent that sells, 10 different companies or however many. I sell primarily Allstate, and then I broker out with companies if they can't qualify for Allstate.
Sure.
Yeah.
And is it primarily just auto and health, or home and auto, or the full boat?
So I avoid health insurance at all the way. I try to never have to do anything. And that is one of the benefits of having, your own agency. There can be things that just you aren't as interested in.
Sure.
And I'm gonna let other people handle health. But with Allstate, we pretty much cover everything. So we obviously cover autos and homes. That's the bread and butter. Then we do all the little stuff, all the toys. So you've got the boats and the motorcycle, UTVs. If you have a UTV, you call me. I will kill every other company there is. For some reason, we love those side by sides. But we cover all of that. We also do life insurance, which I guess I kind of assumed that you assume that most people think that all insurance companies would cover life insurance, but that is a misnomer. A lot of people don't even think about it.
Wow.
We cover life insurance, and we also do financial services.
Hmm.
So I'm securities licensed. Again, I have somebody else that helps me with that, because while I'm really licensed, I let other people who like that stuff a lot better. So I stick to a lot of P&C and life insurance, and then I do the financial services through one of my partners.
Awesome. We were talking yesterday in our episode about just how we're seeing realtors getting mortgage licenses.
Hmm.
And we were talking about how the benefit is it's eliminating one person a part of the transaction, so
Hmm.
the customer doesn't have to meet this person. We were kind of counting, maybe in Kansas it's probably about 8 people that are involved, 8 different professionals, from home inspectors, appraisers,
Right.
underwriters and such. So just the elimination of just one extra person might be a benefit to the customer. But we were
Right.
also just talking about how but then another side, the flip side is, can you be the best at one thing versus the other?
Correct.
So in your industry, the
Mhm.
whole financial advisor slash insurance can do some things as well.
Mhm.
What's your take on that? I mean, is there a level of like expertise that maybe a financial advisor has versus an insurance agent, or you know, I'm not the little Big Apple. What do
Yeah.
you think?
I think that people, I mean, you don't want to be the, oh gosh,
Jack of all trades, master of
the
none.
master of none. You don't want to be that. But it also, I always joke that in another life, I would do what you're doing. I would do mortgages because I have a big love of educating people. And a lot of times I spend a lot of time with first time home buyers when I'm working on their insurance. And I'm like, okay, so make sure you ask your lender to explain this to you, because the amount of people who have no idea what the word escrow means, like
Oh
what it
man,
means. I will have people who are like 65 and they'll be like, what's escrow again? I'm like, haven't you had your house for like 30 years? And they're
right.
like, yeah. And I'm like, okay. Like, I'm always surprised what people don't know.
Hmm.
Um, so that's the reason why I kind of, while I have to be licensed in some of those things, it's good because in insurance, the whole idea is that you're protecting that person's stuff, right? Well, how am I going to protect that person's stuff if I'm not protecting that person's life, right? So I'm protecting their house, but what happens if the people that live in the house, if something happens to them and they can't stay in that house? So it really, I feel like it's a moral thing for me to ask people about life insurance because I say, well, nothing's more important than your life, right? And the people in your life and making sure they're covered. So I'm glad that you're letting me cover this boat, but we at least need to have a conversation about this. And then because of that, that can lead into financial services and understanding the whole picture. I'm not going to offer an umbrella policy, which an umbrella policy is like an excess liability policy. I'm not
Hmm.
going to offer that to every single person, but to know if that person needs it, I have to have some sort of knowledge about what assets they have. So it's very easy to kind of, all of that kind of goes together, just like insurance and mortgage and realty all goes together.
Sure.
It all kind of pairs up really well. Um, but I also know there's a reason why doctors have specialists, right? So that's the reason why I'm like, hey, I'm really good at this and I'm going to have some knowledge and I have some licensing, but I'm going to let the person, you talk to this person who would be really good at handling this so that way I can handle this part of things. So could I be better at it and more knowledgeable and say it's and do it all? Probably, but I kind of like the idea of keeping it a little bit separate, but knowing how to work together to give everybody a really cohesive conversation and help them out cohesively.
Yeah, I love that answer because it's about building a team, a financial team around you
Right.
as an
Yeah.
individual, and
Right.
so the financial team. And to your point, yeah, I could probably teach my son to be a loan officer, and as long as you're a W-2s and pay stubs and
Right.
a cookie cutter situation, I'm sure he could handle that. But the complexity, some of the nuances, that's going to take an expertise of years of
Yeah.
experience and years of closing deals to really
Mhm.
decipher, can you help me or not.
Right.
Not one size fits all. But I was also too, what would you say is the biggest misconception people have about insurance when it comes to home ownership?
Oh, okay. I'm off the cuff. All right. So it doesn't mean it's the 100%
We love it. It's
end all
live.
be all.
It's okay.
But I think the biggest misconception is that people assume that insurance covers everything. If you go to the doctor, and I'm sure this is frustrating for everyone, not just me, but like you'll go to the doctor and you'll say, I feel like I could be sick. I feel like this is, what's going on. And they'll say, well, let me go and look at your insurance and see if your insurance will cover me to run this test. And it's like, wait a second, why does it matter with my insurance? And if you ask the doctors, they'll say, because so many people they think I have insurance, therefore it should be paid for. They
Mm,
have this feeling of, I have it, therefore it should be covered. And insurance companies are like, wait a second, not everything is covered. So again, that's the reason why I'm really big on education. I mean, we'll have people call us and ask us, hey, replacing my HVAC system because it's 25 years old. Is there any coverage for that on a homeowner's policy? Well, what people don't think about with insurance is that insurance is sudden and accidental. Something has to happen suddenly for us, and accidentally for us to cover it, right? And there are different policies that cover different things, and there can be all sorts of different stuff, home warranties, etc. But in a traditional policy, there's not generally, I always say generally, coverage for maintenance. And a lot of people are like, but why wouldn't maintenance be covered? And I'm like, because you're a homeowner and you still have to maintain your house. You can't just let something break and then hope insurance pays for it. So that's probably what I would say is one of the biggest misnomers. I kind of refer to home insurance these days as kind of like major medical insurance. Like back in the day, it probably covered a lot more things. It covered roofs up until, your roof could be 29 years, 364 days old. And if a hailstorm hit, we were going to replace that roof. And now, now there's a lot more questions to be asked, and how much of this is the insurance company going to pay and all of that. So I look at it as kind of like more of a major medical situation now, instead of it's just going to cover everything, if that makes sense.
Yeah, it does. No, I think the hard part from a consumer perspective is I don't know what questions to ask.
Yes.
I
Right.
don't know. I don't know what I don't know. And then I make the assumption that,
Yes.
I got an insurance policy, and then there's a flood in my basement, and it's like,
Right.
well, you didn't have a you didn't have a flood insurance. It's like, I was supposed to have that? I thought,
Yeah.
What's the point of having insurance?
Correct. And that's what somebody says. And when people call in for quotes, they'll say, well, my rate went up and I haven't had any claims. They always say, I haven't had any claims. So everyone associates turning in a claim with the reason why the rate went up. Like, because again, they don't know what they don't know. They're not, and they don't have to know everything, which is part of the reason why the moving into the idea of let everybody write their own insurance policies is so like terrifying to insurance agents, the Progressives and the Geicos and the whatever, because we're like, do you have any idea what you bought? And they're like, no. I'm like, okay, well, you had this much coverage and now you have this much coverage because, I have to be licensed just like you do. Like I have to be licensed. I have to be appointed. I have a background check done on me. I have all these things that have to happen for me to sell insurance. So I don't know why insurance companies were like, well, people want to try it to do that themselves. And I'm like, how do we think that's going to pan out? So the amount of time somebody writes a policy online and then calls me within 20 minutes and says, hey, do you think you could do this, blah, 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 blah for me? And I'm like, huh? Like, no, your policy is completely wrong. Like, I don't know. Like and you try to help, but some points it's like, you got to figure this out, bro. Like, and that's unfortunate, but sometimes we can't even help them at all because they've already wrote their own policy.
Yeah. It's hard to untangle something that's already been done.
Correct. Yes.
Other than rewriting a brand new policy, because it's like,
yeah, and all the companies have rules on that and how you do it and all of that. So even that gets complicated. But so it's very surprising to me how often, obviously it's a huge deal. Tons of people, but my favorite are the people who start the quote online and then go, this seems complicated. Let me call my local agent. And then I'm like, thank you for calling me. Thank you. I can fix it before you screw it up too bad.
No, because one thing, like if we talk about a little bit deeper, like into actual costs versus replacement costs, something that's simple. And I think actual cost is actually a cheaper policy than replacement costs. And so sometimes when we go there as a consumer, we're always thinking, I want the cheapest policy possible.
Correct.
And we don't know the repercussions that will come when we choose something cheaper. So can you talk about actual, because that's something that always pops up with us. Can you talk about actual coverage versus the replacement coverage?
So you've got ACV, which is actual cash value, and you've got replacement cost. I would probably say, do not quote me 100% on this, but I would probably say 90% of homeowners policies are built to be replacement costs. Now you can of course buy a policy that actual cash value. There's a lot of the little companies, but all the major big players. You got your Farmers, Farm Bureau, Liberty Mutual. You've got Allstate, obviously. All the big players for the most part do replacement cost. So, and for the most part, in a claim, where it gets really confusing for people is if your roof is $10,000 to replace, but it's halfway through its life, then when a claim happens, all policies are actual cash value until you actually replace that thing, if that makes sense. So an actual cash value is depreciation. So if your house is a $300,000 house when it was built, and obviously it can go up in value, but it's 10 years old, an actual cash value policy is going to pay you on a house that is got 10 years worth of wear and tear to it, instead of paying you at what is it going to cost? Because that $300,000 house is now going to cost maybe $400 to rebuild. And instead you get paid, well, if they do actual cash value and it's 10 years old and they do all this fun math behind the scenes, they may pay you $260. Well, can you rebuild your $260,000 house that's now $400, $400,000 to rebuild? No. And so you have to have, replacement cost is super important. I think the idea of actual cash value, luckily I hear less and less and less people talk to me about it. Really, when you get into actual cash value, it's for rental properties. People who are landlords, they crack me up. They will more than anybody else. It is property owners who are renting that will strip policies down. And they're like, it's an old house. If it burns to the ground, I'll just sell the lot. They're just very chill about it. So that's where you really have to watch actual cash value, not as much on actual home policies.
No, I think we got a couple questions coming in. So let's take some of these.
Some.
Super cool. Jeff, how do you explain coverage gaps for first-time buyers?
Coverage gaps. So yeah, I think, again, like we talked about, that most people think everything's covered in insurance, and notoriously earthquake coverage isn't covered. Flood insurance isn't covered. A lot of times coverage for maintenance and things like that. And that's the easy big players. That's not even all the weird little nuances type of thing. So the good thing is that with Allstate, our home policies are very customer friendly in the fact that we can just start at the top and work ourselves down to things. So it's just about telling people, listen, this is a replacement cost. This is how much we think it's going to cost to replace. We work ourselves through the coverages to make them feel comfortable. And then we tell them, I'm giving you my suggestions as a professional, but in the end, you have to make your decision on what it is that you want. And I'm always surprised at things that people will say no to and then say yes to. I can never make a guess. But I just tell them there are certain things that you're just flat out not going to be covered for. And so you have to figure out how to navigate that. People will ask me about flood insurance. They typically ask me about flood insurance after a flood happens, So we explain coverage gaps. It's one of those that we're never going to be able to cover absolutely everything. We're just not. We're not going to be able to cover everything, and they're not going to remember everything. So we just try to give them the highlights, and then we say, anytime you have questions about stuff, please reach out to us. Do not reach out to claims. I would say one of the other big mistakes that a lot of people do is that the companies are really good about saying, oh, just do your claim online. Oh, do this. And I say, please don't. If you have a question, please call me. If you have an accident on a Saturday, call me on Monday. The more that we get involved from the beginning of just being able to navigate them through that, there are plenty of times where somebody tells me they think they have, hey, my neighbor got the roof replaced. Could I have hail damage? Well, I could just turn in a claim. And then what if that doesn't go well? Or I could say, well, how about we have a roofer come out and take a look and give us some insight on that? I don't know how well I answered that question, but coverage gaps in the end is we just have to do our best to try to cover the main topics, because all the little nuances there's so much in the gaps that's too hard to know.
I think it may come, and this is just a logistics of the timeline. So I'm
Yeah.
coming to you, I'm buying a house, and I want it, and I'm being told I have to have insurance.
Right.
So I'm generally going to come to you because I probably have auto insurance with you,
Hmm.
and I'm told that I might get a deal if I bundle my auto with my home. So I call you
Right.
up, and I'm just looking for insurance. And my mentality at this point is I'm looking for the cheapest thing I can find. That's
Right.
all I really want to know. And so when you give me this coverage, you're probably the teacher from Charlie Brown. Wow, wow. I don't really know what you're saying. All I know
Right.
is what my premium is. But
Right.
I feel like, and what we should do, hopefully, as responsible professionals, somewhere after the closing takes place, hey, let's just review this policy that you
Right.
got and make sure you understand the do's and
Yes.
don'ts and the things that it does cover. And
Hmm.
then maybe that'll spark your mind, like, oh, this doesn't cover hail damage that comes.
Yeah. Yeah.
It's like, I thought it did. Oh, wow. So
Yeah.
what will it take to get hail damage coverage? Because I
Right.
know I've seen that in my rental or what have you. So
Right.
I feel like after the closing, sometimes is the best chance. I know yesterday I was talking to a client that I helped close a deal about 6 months ago, and we were starting to just kind of go over, like, what actually did I do? You know, she's like, hey, when can I refinance? And hey, down payment assistance, and like,
Hmm.
is this still with me, or what did you actually do for me, Dante? Other than, I know I got the house, I know I'm paying my mortgage, but I think it's important that we have these things, implemented in our strategies of keeping up with our clients.
Right. And that's something that we do. So, Allstate does a lot of different type of tracking. And one thing we track is 90-day retention, which in my mind, I'm like, who's shopping insurance after 3 months? Like like what could have occurred in that thing? But I hear that that 90 days can range. I mean, I know agents that their 90-day retention is 70%. And I'm like, well, then something's happening on the back end that you're not circling back to those clients when onboarding them, like you're talking about, to review stuff. Well, my 90-day retention is 95%.
There you go.
So our onboarding is spectacular. We call people, about 2 weeks after we review, we let them know, hey, we updated your address now that you live in a new house. Hey, let's go through these coverages again, just to kind of remind you how these things work. Hey, here's how we handle claims. Here's how, we just do a review. Again, like you said, coverage gaps. Are we going to be able to cover absolutely everything that's in that person's mind and that person doesn't know what to ask? No. But if we can cover the highlights, we also let them know when this home renews in a year, expect a call from Carrie in my office. She's going to call you and she's going to say, hey, your policy's coming up for renewal. At the time, you said no to this and this because you didn't think it was a big deal. Let's review that again and see, now do you feel differently now that you've been in the house for a year? Would those things be of interest to you now?
Right.
And so that is something that we do. I mean, and our retention per year is really good and our 90-day retention is really good. So you're 100% correct. You need to have a conversation after the fact when people's minds are a little bit less scattered because they're getting so much information from so many other people.
Exactly. No, awesome. Go to another question here. Jennifer writes, what's one tip for saving money without losing protection?
I'd probably tell you that an insurance agent is going to tell you the easiest way to save and not lose protection is to raise your deductible. That's not the answer people like, but is that the easiest thing you can do? Yes, without losing any coverage whatsoever. Um, but it also means that you're willing to take on more risk as the consumer. And it's just about making sure that you understand what that looks like.
So, like a higher deductible.
Yeah, that I would tell you that is, I'm not saying it's a good tip. I'm saying that I'm saying that if somebody says, I don't want to lose this and I don't want to lose this and I don't want to change this, then I say, okay, well, really all you have left is that you raise your deductible up, which means that you take more on yourself. So if you had $1,000 deductible, the cost is going to be one thing. If you're willing to raise it to 2,000, where you're responsible for the first 2,000, then you're going to pay less money. And so that's an easy way to take on more risk. And it's an easy way for you to save money without losing protection. But obviously it's coming somewhere, right? You're saving money here to pay more later. And so that's where you have to make that decision of if that works for you.
Got it. We got another Jeff. What's the most overlooked part of a homeowner or home insurance policy?
Okay. I'll go with my first thought, but there's two things. One, liability. Liability is this like invisible thing that's out there that people are like, I hear that I need that and I have to have it to be able to like move into an apartment or drive a car. Like, I know I got to have it, but like, what does it mean? If you're driving down any major city, if you're looking at all the billboards, what are you going to see? You're going to see a ton of injury attorney ads, right? They're all saying, have you been in an accident and been hurt? Call me, type of thing. Same thing with the home. If liability is one of those things that a lot of people overlook, they know it's on there, but the question is, do they have the right amount of liability for their assets? I always tell people, anyone who has their house paid off, for example, I said, you didn't work your entire life to pay off your biggest asset to then not have the right amount of liability. And if somebody comes to your house and gets injured or falls off your roof and turns around and sues you for it, you don't want to not have the right liability and then have to turn around and put a mortgage back on your house because you got to pay for that lawsuit. And so everyone has it. The question is, how much do they have? And is it enough for them based on their assets?
Yeah, it's probably a major importance for an investment property, I would imagine, right? There's always the storyline of your tenants are outside and they have a dog, and the couple are walking right by and get bit by the dog, and now they want to sue not only the boy's parents, but they'll probably sue the homeowner of that property as well.
And a lot of lenders, or sorry, not lenders, a lot of landlords, they will say, well, my house is in, all my homes that I own and rent out are in LLCs or in a business entity. And my response to them is always, attorneys make a lot of money for a reason. Like, you can have all your stuff be in all these other, you think that they're protected, but they get paid a lot of money for a reason. And that's so that way they can figure out how to get back to you personally. So you have to protect yourself personally, even when you're a business owner. You can't just rely on the fact that you've got some business entity to hide behind, right? You have to have enough here and you have to have enough here. And I think a lot of people really overlook that.
No, I love that. We see that growing trend. And it really started like in the pandemic, where you see so many people, I got to get my LLC. I got to have my LLC. And I'm like, well, it's still, it's tied to you. It has an EIN number, but it's still attached to you as you're the personal grantor of that LLC.
Right, exactly.
You got to be careful about that.
Correct.
All right, next one. Got Jim here. Should realtors always recommend an insurance review? That's an interesting one. I mean, how do you normally get in contact, let's just say with a buyer? Are you recommended by the realtor? Is the realtor the one telling you? Are they calling on their own accord? Are how do you normally see it?
Yeah, you'll have referrals. So, we have referral partners where if a realtor or a mortgage lender has really great experiences with, how we handle things and how we get them paperwork and request things and all of that they'll mention our names. In the end, all of us can't, we're not legally allowed to say, oh, you have to call this person. We can give somebody a friendly referral, but we can't say you have to go there. Right.
Correct.
And so, I mean, I think that it is fair for a realtor to say, hey, you can always shop your insurance if you feel what you have is too high. One thing that realtors don't necessarily know all the ins and outs of insurance, just like I don't know all the ins and outs of mortgages. I know a fair amount, but I don't know everything. And so I'm always like, it's one of those where an interesting thing because I think that it's fair for them to say, hey, you could go out and shop that. I think it's another thing for a realtor to say, that seems really high. You should definitely call this guy over here, because they don't really know what's really high,
Right.
because they're not in that sector, right?
Yeah. I mean,
So
it's the constant stay in your lane.
yes, yes, right.
Well, I mean, we deal with it too, right? So if I
Yeah,
give an interest rate and they're like, "Oh, that seems high," you should go call this guy, But it was like, "Hey, do you know this person's credit score? Do you know how much money they're putting down? Do you know what loan program they're doing?" So it's
correct.
always subjective to
Yeah,
how much you know. So in case of you, I would imagine, do you know all the coverage that they wanted? They wanted the sub pump coverage. They wanted the roof coverage. They didn't just want a cookie cutter. They wanted
100%.
deductible $250, so that those all make a difference. And that's to my point where it's like sometimes it is about the numbers, especially when you're trying to get a loan. Maybe the debt to income is really tight,
Hmm.
and sometimes hey, we make the policy a little bit more favorable so they can get
Hmm.
approved and not have an issue. But
Right.
you definitely have to go back to that insurance agent and sit down and make sure that you're taken care of after that closing.
Yeah. Yeah, and that's why we talk about the deductibles. Very, I have never, when people are in that spot with the tight debt to income, I've said, well, you can always go with a higher deductible. And then, at some point we can look at lowering that down or something like that. But I've never said to anybody, well, let's just lower that cover it. Let me go put you on an actual cash value plan. Or
Mm,
I've never, um, I've never thought that it was valuable to not have the home insured correctly for, because in the end, sometimes the insurance cost is the insurance cost. And that is the answer for that customer, unfortunately. But that's why I say that deductible helps move the needle a little bit. And they can make that decision of how much risk they want to take on, to help with those situations.
awesome. Another one here from Joey. Can bundling policies really make a huge difference?
Yes. Um, I have had, so I'm old, okay, old in insurance. Even though I know I don't look it, but I've been doing insurance for 21 years. So literally, I started before I graduated college,
So we're the
and
same age.
yeah.
Yeah.
And the interesting thing about bundling is that, again, every insurance company is always trying to figure out what their demographic is, like who they're looking, who is it that they're looking for? What's the demographic that they want? How are they going to go about getting those people, right?
Mhm.
And so I'm on my one, two, three, four, fourth auto policy now. So I have people who have a policy from the 60s.
Wow.
And I have people that have policies from 20 years ago, 10, et cetera, right? So I have all these different policies. And on each of those policies, how much the multi-policy discount is different on every single one of them. I've had it be as low as 5%, and we're like, get it together, Allstate. We need a bigger bundling, whatever. And I've had it be 25%.
Mm,
So it can make huge differences for people. One of the things that we do, there's a couple other companies that do it as well, but one thing that sets us apart is that we have a one deductible benefit. So if you have your auto and home with us, not only are you getting discounts on each of those, along with whatever else you have with us, but if something happens and you're out driving home from something and hit a storm and your car gets hail damage, and then your house is also getting hailed on, because that's one incident, you only have to pay one deductible to get everything fixed instead of each individual deductible. And then a large majority of the companies do not do that. So bundling, that's something that's good to check with your agent on and say, do I have any bundling benefits? Not just discounts, but like deductible options and things like that.
awesome. I'm curious. Are there other benefits or besides bundling? Like I know back in the day, like school transcripts was one, or straight
Mhm.
A's. I mean,
Yep.
that's still relevant.
Yeah, good student is still relevant.
Mhm.
Length of time you've had insurance. A lot of people have no idea about this. So, for example, if somebody tells me, this is notorious, all insurance people who are watching this are going to agree. It is a notorious thing that somebody will say, hey, I'm selling my car. And I say, okay, great. when are you going to buy another car? And they're like, oh, it'll be months from now. And I'm like, okay, well, here's what happens if we terminate your policy. And we explain to them, if you're uninsured and you don't have a replacement policy, then when you come back to us, we might not be able to write you. It could cost a lot more money, things like that, right?
Mhm.
And notoriously, we will have this conversation and they'll call me like 2 days later and go, hey, I bought a car. And I'm like, wait a second, you said months. So a lot of people do not realize that the longer you have insurance history, the better your rate can be. For some reason in the world of insurance, 3 years is a big one. So a lot of insurance companies, once you've had at least 3 years of continuous coverage, you get better rating factors.
Awesome. Yeah, no, it's been great. Thanks to to the audience for producing these great comments and questions. If you do have more, please put it in the comment section. Also, too, if you are liking the content, if you're liking the information that we're providing today, make sure you give this a like, whether you're on Facebook, LinkedIn, or YouTube. Make sure you give this a like. Definitely share with friends and family. That allows us to know that what we're providing you is what you want to hear on a daily basis. We're here Monday through Thursday from 12 p.m. to 1 p.m. Central Time, trying to give you information about real estate, mortgages, and other things that are related to that. And obviously insurance today has been great information. Want to take this time right now with a little housekeeping notes on our preferred listings. So we have some preferred listings that we can help buyers who are looking for homes get approved. We have 2436 Planters Millway. That's Conyers, Georgia. It's going for $399. It's a 4-bed, 2.5 bath. Contact Angela Pinnell, 404-425-4660. We have 1100 South 3rd Avenue in Maywood, Illinois. That's a price reduction going for $375. It's a 5-bed, 2-bath. Contact Tamika Bishop, 630-479-6352. We have 8228 South LaSalle, Chicago, Illinois. It's a 3-bed, 1-bath. $250,000. Amico Pope. Contact Amico Pope, 808-428-3770. We also do commercial lending, as people know. So we have a commercial storage going for $165. That's at 1413 East End, Chicago Heights, Illinois. Contact Amico Pope, 808-428-3770. We have a commercial unit. Used to be the former Burger King at 1645 Western Avenue, Chicago Heights, going for $339. Contact Keith Terry, 773-655-1360. One of my clients, he's selling his house. So contact Evelyn Woods for 14327 Lincoln Avenue, Dalton, Illinois. It's going for $225. It's a 3-bed, 2-bath house. Evelyn Woods, 773-718-9742. Can't even read my writing. We got some condos for sale. 548 East 50th Street, Unit 3. It's a 3-bed, 2-bath condo. That's a big condo. Contact Jessica Roberson, 708-722-5106. We have another condo, 6945 South Dorchester, Unit 2S. Contact Evelyn Woods, 773-718-9742. And we have 9049 South Parnell Avenue, just hit the market. It's going for $279,980. Contact Sebastian Kupiec at 773-430-8988. And last but not least, if you are interested in doing fix and flips, we help people with renovations for fix and flip. If it's a primary home or if it's an investment, we have 7723 South Honorary Street in Chicago. Contact Brittany Davis, 773-971-8714. Those are our preferred listings. Have you ever been to Chicago?
Yeah. You wanted me to tell you when I was in Chicago?
Yes.
I was in Chicago January 15th for a week for agent training of 2020.
Ooh.
And I was sitting in the bar with some other agents. We were all opening March 1st of 2020 was when we were opening. So I've been an agent. I've been I ran a mega agency. So 4 locations from 2004 up until 2020. And then I bought one of my old boss's books of business. So one of his offices I bought, and I was set to open March 1st. So in January, where they fly us all up to Chicago, like I don't know, like 150 of us maybe. And we're there for training. And I'm sitting there talking to somebody and they said, have you heard about something called coronavirus? And they said the first case, I guess, might be here in Chicago. And I was like, weird. And we're like having this like, and then we all fly home and then we all open our offices and then we all close down 12 days later. So it was an interesting time in history for us.
Oh, wow. It's funny. So in 2019, I started the process of opening up Epic Mortgage.
Mm-hmm.
And so we opened the doors October 2019, October 1st, 2019. We opened up the doors. So here we are, here we go. And, March 15th, we're shutting down and saying, what? And I'm freaking out, honestly, as a business owner, as investing in everything that we're doing. I said, whoa, did I just lose my life savings for this? Like, what is going on here?
But at that time, what was good for you and was good for me was that rates were really good. I mean, I refinanced my house in like July of 2020.
Correct.
2.75. Hey. But it was, I called it the Love It or List It. Remember the TV show Love It or List It? It was kind of like that, where people were stuck in their houses and they went, ugh, well, I don't know if I can move because there's weird stuff going on. So I'm going to go ahead and refinance this because the rates are great and I'm going to take some money out and go fix it. So I feel like a ton of people like at that time were renovating their houses.
No
because
doubt.
It was like, this is all we can do. So it was definitely terrifying for you and I, but I think that's why we also were able to kind of come out of it okay. Because it was like, well, people still needed to refinance. People still needed, it's just navigating how to go about doing that in a way that we had never done it before because it wasn't in person.
Yeah, the initial was fear, in March, but then to your point, maybe May, June, it got figured out and we were deemed essential. We were essential people to be working. So, and then that opened up the door. Yeah. I mean, I was talking about my, the lowest rate I ever was able to give was one of my clients, Miss Sanders, if you're out there, thank you. 1.75 on a 15-year fix. So, I mean, that's just, it was just unreal. It was, so it was
I had a friend
life
that had
changing.
that. Yeah.
Yeah.
I think his was 1.6. Maybe I could be but it was definitely in the ones. And I went, dude, never.
That's crazy. Yeah.
Never.
Yeah. You're done.
Yeah.
Yeah. No.
Jeff had a question on here if you saw it, and I actually was excited to answer it if you see it.
Jeff.
A lot of J names, man.
A lot of J's and Johns.
What's the most common mistake during policy selection?
What's the most? Did I miss it? Okay. I don't. Okay, where am I? Is it this one?
Nope.
No.
It's a Jeff L. and it says, what's the most common mistake during a policy selection?
Okay.
I don't think we've covered that. Am I crazy?
No, I think you're on the money. I didn't see this one. Yes.
Okay, Jeff. I will tell you.
That, Jeff.
Yeah, I will tell you. I can't necessarily say it's a mistake. I can say it's just, again, not knowing what you don't know. A lot of people hear what it costs to replace homes now, and they think that's insane. And so a common mistake that happens is that people assume we're just trying to like insure a house for a crazy amount of money because that the premium will be higher, right? But instead, in reality, it's that I always tell people there's 4 numbers in insurance. Okay. You've got, or not in insurance, but in real estate. You've got the county appraisal, which hopefully it's the lowest number there is. We want it to be low so we can pay less taxes, right? And it normally is. I don't know if I have ever seen it be higher. You've got what your house can be sold for, right? What somebody's willing to pay for it. You've got a private appraisal, which Epic Mortgage is going to make you go get a private appraisal so they know what it is they're, putting a loan out there for. And then you've got a replacement cost. And typically that replacement cost is every time going to be the highest thing. And so one of the big common mistakes is that people freak out when you tell them we think it's going to cost. I mean, I live in an area where I can have somebody live in a small town, 50 miles away, and that they're buying a house for $60,000. But if that house burnt to the ground, it could easily cost 200,000 to rebuild that house. And so that's a common mistake where people are like, no, I don't want insured that much because, they assume that means it's going to cost them an arm and a leg for insurance. And I have to explain to them, no, that's just what it will literally cost to replace your house. It is very hard for people to wrap their minds around what it will cost to rebuild their house. And so that's just part of our job of walking them through that. I just met with my builder the other day. I built my home 9 years ago. We've lived in it for 9 years. I built my home. I had a builder build it. He's doing some work for my in-laws, and I was over there speaking with him. And I don't know how he remembered in 9 years, but he said, do you know what we built your house for? And I said, yeah. And he goes, I think we built it for about this much. And he was right on the money. He's an old guy. I cannot believe he could remember how much it cost to build my house. And he said, do you know what it would cost me to rebuild that house today? And I said, about this much. And he was like, exactly. He's like, can you believe that you built your house at the perfect right time, type of thing. And what's crazy is that it would cost me twice as much to rebuild my house today. In 9 years, where I live, that is how much it costs to, so think about my insurance. My insurance is now twice as much insurance as it was 9 years ago. Now the cost isn't twice as much, twice the price, because that's not how it works. It's lower than that. But I think that's what people think. People think if I'm insured for this, then I'm definitely going to be paying a lot more. And that is not true. It doesn't work that way. $10,000 in insurance is dollars every year, not hundreds of dollars. So don't be scared of that.
In your annual review, I mean, is it common that insurance can go down at some times, or are there things that are discovered during the process, or is it just always one of those things? Okay.
Well, so insurance companies have these, we use cost estimators, and the cost estimators, over time can go up. They call it property insurance adjustment. And so PIA. And so every, next year, my house might need to cost $5,000 more to insure because the price of, nails for blah, blah, blah costs more. And so in this case, it's $5,000. And so that property insurance is going to adjust a little bit. Well, one thing you found during COVID, which was an example, is that when the price of home building went up so much, insurance companies for like 3 years had to go in and go, oh, we don't think we're insuring it correctly. And they took these big chunk raises on that property insurance adjustment to the point that then people potentially were overinsured a little bit because they just did a mass overhaul for everybody. So what I did is anytime we did reviews, we went in and went back through their cost estimator. And sometimes it was proven correct that basically their insurance adjusted a little bit too much and it could actually come down. So yeah, that's not that weird. I think that everybody should relook at their replacement cost estimator, every few years to make sure that it hasn't gotten out of whack.
Oh, that's great information. That's awesome. No, can we get your contact information?
Yes. What all do you want? You want all the things?
Give me all the things, handles, phone numbers.
So I am Prey Family Agency. I am licensed in Kansas, Nebraska, and Missouri, but I also have agents from all over the country that could help you. That I would not hook you up with somebody who wasn't as good as me. My phone number is 785-370-7454. My email is my name, Laura, LAURA, PRAY at allstate.com. So it's pray like you pray to God. And I do have a Facebook. If you were to look up Allstate Insurance and put in Pray, it'll pull up Prey Family Agency. You can watch me sing karaoke every Friday if you want to, and do silly, dumb little videos sometimes. I try to include my kids sometimes. But I sing karaoke every Friday. So if you just want to laugh at somebody being silly, you can check me out there.
I wasn't laughing, but I did see you.
You did?
Yeah, that was great.
All right. Yeah, I do. Sometimes we wear costumes, so that does happen.
I did not see that part. Okay.
I do have a video where we always try to stick with a theme, and we did No Shave November, so songs of men who have beards. and
Interesting.
we did a ZZ Top one, and
There you go.
my social media person put a filter on me that I was bald.
Wow.
And so I'm wearing this crazy outfit and I'm bald in the video. And I had a friend of mine reach out and said, literally, my wife and I have sat here watching this video over and over again and laughing so hard because of the fact that you have no hair whatsoever and this huge long beard like ZZ Top. It was very fun.
No, I mean, you got to have fun nowadays. And I'm curious, just as we're wrapping up, just
Mhm.
marketing wise, do you feel like that's the move to make to stay relevant within your clients that see it, or picking up new
Yeah.
clients potentially? What are you thinking?
I think that in the world of insurance, nobody wakes up and says, I want to be a insurance agent when I grow up,
Mhm.
astronaut, insurance agent, right? Nobody does that.
Sure.
Um, and uh, and so we have to make it fun because people do get lost in the minutia. People do have no idea about what it is they don't know, right? And so if I can give them some fun and then also give them some content in fun ways of how we cover things, how we can cover things that aren't covered, and give them some of that information in a creative way that might actually make them remember it instead
Yep.
of just calling me up and telling them. I'm going to give that a try. So we try to do a little bit of the fun stuff just to make them want to circle back, but we also then try to include important content too.
Edutainment. That's what I call it.
Yeah.
Edutainment.
Oh, I like that.
Yeah.
That's nice.
So, no, Laura, you've been great. Our hour is up. We were here. I think we answered everyone's questions, hopefully, in my
Perfect.
bad eyes, but she picked it up for me. So I appreciate that. But yeah, so we're off tomorrow. So everyone have a great Labor Day weekend.
Mm.
Go Kansas State Wildcats.
Yeah.
So, it's funny because we're in the Chicagoland area. So we're more bear oriented,
Okay.
professional team oriented.
Yeah.
I mean, we got Northwestern, Illinois, 2.5 hours south
Yeah.
of us. So, we don't really get the college atmosphere per se. We've
Oh
got a
no.
lot of alums, so we don't get that atmosphere. So, no,
I am
enjoy.
in I'm in college town. We
Yes.
wear purple on Fridays and I'm downtown. So I just all day long. It's purple going by all day long.
OMG. OMG.
Yeah.
Hell, have a great weekend, everybody. We'll be back on Tuesday. It'll be me and Vince, and we'll take it from there. Have an epic day.
Thanks.
All right. Bye.
Bye-bye.